Hi everyone, so let's take a look at the circular flow of income, a really important concept in macroeconomics. This will help to improve your understanding of the macroeconomy as well as the potential impact of various policies that can be introduced by the government and various macroeconomic variables and the impacts they may well have on the economic system. Okay, it's also a nice visualization, so it gives you a visual cue to actually remembering this circular flow. Okay, so this represents the flow of incomes around an economy, illustrating injections and withdrawals taking place. Okay, so it highlights money coming into the economy as well as money leaving the actual circular flow of income here. So we can break this down to different categories of circular flows, and those are circular flows where they do trade with other nations, as in an open economy, and circular flows which are closed, so a closed economy circular flow of income highlights the fact that trade does not actually take place. Okay, so that's important to understand when it comes to any multiple choice questions on the circular flow of income. Right, so let's take a look at what we've got. Firstly, within one of the instances of a closed economy that we're going to focus on here, and that is a two-sector economy. So a two-sector economy is one where households and firms are present in the marketplace, in the economy rather, and that is it. So we can see this represented here with our households and here with our firms. Now, firms of course will provide goods and services to households, and in return households will conduct expenditure and consume goods and services that the firm has actually produced. So it's a reciprocal relationship. These two categories are highly interdependent, particularly when you consider the fact that firms will of course need to hire labour to be able to produce and an output to produce goods and services. So in return for that, of course, firms will need to offer labourers, households, income. Okay, nice and straightforward. Right, so we can see we've got income going to households, expenditure going to firms. This is the income or sales revenue that's generated by firms. Okay, remember we've got a couple of key assumptions that we're making within this model, and that includes that there is no government, there is no financial sector, there is no international trade. Okay, so we only have households and firms. Further to that, we are going to consider the fact that households will spend all of their money. Yes, perhaps this is highly implausible, but nonetheless you need to understand this closed economy model. So if they spend all of their income, firms receive that, and then of course income is actually provided to households as they provide their labour services, and once again households consume all of that income. Okay, so what does this help us to understand? Well, firstly, it helps us to understand O, and that is the national economic output that is generated. Okay, so if I just represent O there, we can see the value of the flow of goods and services in our economy. So O will therefore equal the level of expenditure, okay, that is actually conducted, and we can see E is the value of spending conducted by households. So the economic output will be highly dependent upon households and their spending. We know they spend all of their money, so therefore economic output will be equal to that. Now further to that, we can also see that if households are spending all of their income, then we can also see that E will equal Y, and Y is income from firms to households. So within this closed economic model, a two-sector economy, we can see that we end up with this sort of scenario, that national output equals expenditure, which equals the actual income Okay, right, so let's scale this up now and let's introduce a three-sector economy. Still a closed economy, because notice we do not have international trade. So what's the big difference? Well, the big difference now is that there will be injections and withdrawals into our circular flow of income. So of course, we need to consider what governments will actually do to introduce money to the circular flow, and that is G. That is government spending. So they will conduct government spending here, and that will mean money enters the economy. But of course, where does that money come from? Well, it comes from tax revenues, T. Okay, so we can see tax revenues denoted down here. Right, okay, now, therefore, we can see money coming in, money going out. This is a little bit like thinking about a bathtub scenario where your circular flow is taking place within the bathtub, represented by the water. The water level also helps us to understand the level of economic activity that's taking place. Meanwhile, we see going down the plug hole here is tax revenue, which can be recycled into government spending. Okay, so now let's scale this up and let's open this economy up. Okay, so an open economy, remember, trades with other countries. So here we are now in a four-sector economy. So what sort of injections might we see? Well, the injections we're likely to see, of course, would be exports and export earnings. So if these firms actually sell some of their goods abroad, well, they will generate income from that, and that will be represented by export earnings. Okay, now in addition to this, however, of course, on our trade balance there is a negative element as well, and that is imports. Okay, so imports will be a withdrawal from our circular flow of income. Again, it's money down the plug hole in an economic sense, because it is money withdrawn from our circular flow of income here. Okay, right. So there we go. That's again nice and straightforward, our four-sector model, and then we can extend that out to a five-sector model, which considers our last injection and our last withdrawal. So that, of course, would represent the financial sector. And the financial sector enables investment to be undertaken, and of course savings to be undertaken as well. So we can see within this model that we can open this up and we can see money coming in represented by the tap, and money coming in, or the plug hole, and money leaving the circular flow of income there. Incidentally, if the circular flow of income is in equilibrium, that will mean that this is a very, very stable scenario, and the level of water in that bathtub in effect is not changing. Okay, so therefore you could see that the actual injections here would equal the withdrawals here. Okay, so injections would equal withdrawals if this model was in equilibrium. Okay, final things just to consider. How useful is this? Well, it helps us to actually calculate likely national income, or at least put some estimate values to some of those elements. Okay, it also highlights the interrelated nature of economics, of course. Further to that, we can also illustrate the injections and withdrawals taking place within various different economies. You could certainly argue that perhaps closed economies, well, good examples there of the three-sector economy, perhaps North Korea. Okay, so perhaps therefore this is useful for understanding those different economic models. And then finally, we can see that economic activity has an unended nature. It's a circular process, that money is withdrawn but then money re-enters the economy here. Okay, all right guys, thanks a lot.